Okay, so welcome back once again. So I hope by now you have gotten down your vital points of the questions down, and then we'll now look at the questions straight away. So I'm going to share my screen with you so that you can look at the question once more. So we have the question at hand. The so the question reads: the balance sheet of HPLC Limited and its subsidiary S Limited on December 31st, 2012 as follows. So don't worry, the one in your book is 2012 and the one in my illustration is 2018. So don't worry. But it's the same thing, just a matter of changing names. So you have the balance sheet, you have your fixed assets, you have your tangible, and then you have your intangible assets. You have current assets, you have your stock, you have your current liabilities, creditors, then you have your finance by section. Now, let's look at the notes, which are very, very important. Note 1 states that the investment by H Limited and S Limited was acquired on 1st January 2010. So your book, I'm trying to use your book because my question is 2016. So this is the question. If you care to see, this is a question in actual I'm reading. So this is the question. So I'm resharing it again so that you get understanding. So the investment by H in S Limited on January 2010 was as follows. So they gave you the investment proportion. So when you look at the question, so the investment in the balance sheet, the 53,300 investment in the balance sheet, they are giving you the breakdown of each over here. That out of that 53,300, 44,000 was invested in ordinary shares. 4,300 was invested in preference shares. And then 5,000 was invested in debenture. So when you add these three, will give you the total of 53,300 you are seeing in the balance sheet as the investment by H. Now, they went on. They said the ordinary shares were acquired when S showed a balance of 12,000 on its profit and loss account. So this is your pre-acquisition surplus. So when you are looking at your cost of control account and you need your pre-acquisition surplus, this 12,000 is what you'll be taking. There is a goodwill on consolidation is maintained. I told you at the initial stage that according to IFRS 3, whenever there's goodwill, you either maintain it or you either write it off. Or you test for impairment. Whenever goodwill has impaired, you write off the impairment and then the unamortized will be sent to the balance sheet. So this is one aspect of it. They say maintain the goodwill. So the goodwill that you'll be determining the cost of control must be maintained. Then they also say that the remittance, no two, a remittance of 1,500 sent by H to S on 30th December 2012 was not recorded in the books until 4th January 2013. So those who studied the last example very well, the example 7, the one we did that was on Saturday, you met a statement like this. And I told you when they are making a statement like this, it means that cash in transit. You have made a payment, but the payment has not gotten to the respective person yet. So if you are paying me and the money has not gotten to me yet, though you have paid, it has not gotten to me yet, the money is on its way coming. And that is what we call cash in transit. Now look at the note 3. So the reason why today's lesson is much more emphasized on the note 3. Last lesson that we did was emphasizing on the note 2 and then the note 4. Today's lesson is much more emphasizing on the note 3. They say goods had been sold. So, and yet old, it is sold. So those who have the handout, you can place S there. This good had been sold at normal selling price by S to H Limited. During the year, the total sales of such goods during the year were 80,000. The stock of H at December 31st contains goods purchased from S at cost. H, so at the cost is 16,000. The profit margin that S earn on these goods is 20% on selling price. So they have given you the profits percent, and then they have given you the cost of the sales to as well. Then you go to note 4. They said no entries has been made in respect of S Limited proposed dividend in H books, and S has no accrued interest at the end of the year. So it means that at the end of the year, every interest on the debenture has been fully paid, left with only what? The proposed dividend. Now, when you look at the question carefully, you can see that they have broken every bit or every aspect of the question in every note. So whichever note that you take, you must deal with it successfully, then go to the other note. So I'll share my other screen with you, then we can take it from there. So when you look at this particular one, the same question. So let me go to my solution that I did for you people. So let's carry on so that we start doing our workings. So from the very beginning, I told you that whenever you see the question, you must determine percentage holding. If you don't determine your percentage holding, you are going to be found wanting. Why will you be found wanting? You don't know who is the holding company and who is the subsidiary. If you manage to know from the question that H has invested in S Limited, you are not going to know the proportion of the percentage holding until you do these particular workings. So from the question that we had, go to the finance by section of the question. We're being told that every ordinary share costs 1 cedi. Every preference share also costs 1 cedi. And so therefore, if I can see from S Limited account that the total cost of the ordinary share is 40,000, then I can confidently say that if one share is 1 cedi and I have 40,000 in cedi terms of share value, then the total number of shares in S Limited is 40,000 shares. If I go to the preference shares to the same, one share amounts to 1 cedi. So if the share value on S books of account is 10,000, then I can say that S has a total amount of preference share to be 10,000. So now we know that ordinary share of H is 40,000, preference share of S is 10,000. Now go to the note 1. In the note 1, they said he bought ordinary shares for 44,000. But how many ordinary shares did he buy for 44,000? He bought 30,000 ordinary share. So how then, or how many percent is he getting from the purchase of the 30,000 ordinary share? So I'll say 30,000 divided by the 40,000, then I multiply by 100. So this is what I'll do. He bought 30,000 out of the 40,000 shares. So if he's buying 30,000 out of the 40,000 shares, then how many percent is he getting from it? And so therefore, he is getting 75% from that particular purchase. So I can say confidently that when it comes to ordinary share, H Limited is having 75%. Minority interest is having 25%. So if the parent company is having 75, and the minority will be having 25. So that is on ordinary share. Then you come to preference share. Preference share in note 1, 2, we were told that the guy bought we were told that the guy bought 4,000 preference share. If you buy 4,000 preference share and I have 10,000 preference share, then at the end of the day, how many percentage is he getting to from the buying of the preference share? So he's getting 40% from the buying of the preference share. So I can now stand here and say that H is having 40% of the preference share and the minority interest is having 60% of the preference share. Now, look at it. When we come to the ordinary and preference share, you can see that for the ordinary share, H is having the majority. But when we come to the preference share, the minority is having the majority. Now, don't say that when it comes to preference share, minority is having the majority. So it is giving minority. Yes, Sadiq.
Yes, sir.
Yeah, what's your problem? Your hand was up. What's the problem?
Sir, I wanted to see if I can record. Sir.
If you can do what?
Sir.
Yes, I can hear you.
Can record it.
Yeah, I'm recording it.
I want to record it. Sir, I should tell you first.
Oh, I'm recording, and you can
Okay.
record if you want to do. I'm recording. When I finish, I'll post it on the platform for you. The last lecture that we had, I posted the recordings,
Okay,
the videos on the platform for you. Are you getting it? So when we are done with this one too, it will be on the platform for you.
Yes, sir.
Okay. So I'm not restricting anybody. This one is free.
Okay.
You can
Right.
record if you want to do that. Okay. Good.
Okay.
All right. So let's move on. So you don't say that minority is having 60% and so minority is controlling. No. When you are a preference shareholder, you are more or less like a creditor to the company. A preference shareholder is more or less like a creditor to the company. Preference shareholders are not owners of the company. And so therefore, having preference share does not entitle you to be owner of the company. The owners of the company are the ordinary shareholders. And we learned from our last semester discussion differences between preference shares and then ordinary shares. And we said one of the differences is that ordinary shareholders have the right to vote at annual general meeting. Preference shareholders have no right to vote at the annual general meeting. So despite the fact that H is having the minority in preference share, doesn't mean that he is not controlling the company. We determine control using only that of the ordinary share. So this is the first workings that you do. Then we will carry on. Now, note 2. They said a remittance of 1,500 sent by H to S Limited on 30th December 2012 was not recorded in the books until 4th January 2013. And this is what we say it is called unrealized profit. So, sorry, it's called cash in transit. So we'll be dealing with our cash in transit when we are on the face of the balance sheet. That way we don't need any workings for it. So when we get to the balance sheet, we will deal with the cash in transit. Then you understand very well. Now, let's go to note 3 so that you understand what I mean. Note 3. They said goods had been sold at a normal selling price by S to H Limited. Goods has been sold at a normal price by S to H Limited. Now, I want to ask you guys a question. S and H. Who is the subsidiary? My first question is, who is the subsidiary here and who is the parent company here? So who is answering? Okay, let me unmute you, then I call you. Nana Kojo, you're on floor. Who is the subsidiary and who is the parent here? Nana Kojo, you're on floor. Eunice, you're on floor. Eunice. Hello.
My network was off. I just keep saying, ma.
Yes. Can you hear me?
No.
I was asking that who is a subsidiary and then who is the holding company in this case. Today I can say LC is very, very stable. So let's go to LC and see. LC, can you hear me?
Yes, sir.
Okay. So LC, who is the subsidiary here and who is the holding company here?
The holding or the parent company.
Yeah. Is who? Who is the holding company? Is it S or H? Who had an answer? Who can answer it? You raise up your hand, I give you a call. Yes, Fred Williams. So, Fred Williams, you're on floor.
H is the holding company.
Good. And then, who is the subsidiary?
And S is the
And then
S is the subsidiary company.
S is the subsidiary. Good. So, when you are going to treat sale of goods, you must know who is the subsidiary and who is the holding company. Once you fail to identify those two, you will be mistaking the treatment of the unrealized profit. Now, we are being told here that S sold goods to H. So you can see that it is the subsidiary that is selling to the holding company. From the beginning, I told you that the holding can sell to the subsidiary. If the holding sold to the subsidiary, then all the unrealized profit will be charged to the holding company's account. But if it is the subsidiary that is selling to the holding company, then all the unrealized profits will be shared in proportion of the percentage holding. So now, if we have now identified that it is the subsidiary that is selling to the holding company, and this is the case here where the holding company holds only 75%, and minority is holding 25%, then whatever unrealized profit you are going to determine must be shared 25% and what? 75%. That is basically what I was trying to say. So look at the question. The question was telling us that the guy sold items to the holding company totaling 80,000 during the entire period or during the year. he sold goods worth 80,000 to the holding company. But the holding company managed to sell, but leaving only 16,000. So they said what? As at December 31st, 2012, goods purchased from S Limited remains how much? 16,000. So the stock of H Limited as at December 31st, 2012. So when they say the stock as at 31st December, I should tell you closing stock. So they said the closing stock of H Limited is 16,000. So if we now know that every sale that S made to H, there is a profit of 20% that he adds to it. Then that 16,000 that is left over there is 20% on it that has not been realized. So I will strike my 20% on that 16,000. And when I do that, I'm going to get 3,200. So that is the workings I did here for you. So it means that the unrealized profit between the group as at December 31st, 2012 is 3,200. So now, it is the subsidiary that is selling to the holding company. So what do? You have to split this unrealized profit in the ratio 75-25. So this 3,200, I'll now share it 75% and then 25%. So 75% of this 3,200 will go to H Limited, and then 25% of this 3,200 will go to what? Will go to S, the subsidiary. Sorry, the minority. So you can see that when I add the 2,400 here and then the 800 here, I'll be getting my 3,200. Are you getting it? So this is how I said, or this is the theoretical explanation I was giving to you concerning unrealized profit. So if it is the subsidiary that is selling to the holding company, you do it like this. If it is the holding company that is selling to the subsidiary, then everything will go to the holding company. So it means that all of this will not come. The calculation of 75-25 will not come in anywhere here. I believe I'm making myself clear now. Good. So let's go to the next one, the next illustration or the next note, which is note 4. And those who were in class last Saturday should be able to do note 4. So they said no entries have been made in respect of H Limited's proposed dividend in his books. So dividend of S, or dividend that has been declared by S Limited, has not been recorded in the books of H. And last Saturday I asked a question, somebody was able to answer that particular question very well. I ask you that now, why is it that they will say that the dividend has not been included in the books yet? And we came to the conclusion that yes, as for ordinary shares, you don't know the dividends you are getting until it has been declared. So until the dividend has been declared, you don't know how much dividend you'll be getting. So until you have seen the balance sheet of S Limited, H will never know the dividend he is supposed to be getting. When you go to the balance sheet, in S account, you can see proposed dividend. S has declared preference share dividend of 300 and has declared ordinary share dividend of 400. S declared ordinary share dividend of 400 and then preference share dividend of how much? Of 300. So a total dividend declared by S Limited was 4,300. But now, let's look at how we treat that particular one in our books. Now, note 2 my notes 2 here or my workings 2 is telling you how you are going to treat your dividend. So the statement that is no entries have been made in the books of H Limited in respect of S Limited's proposed dividend. So the proposed dividend of 4,300 has not been recorded in H Limited account yet. And you should bear in mind that H is having 75% of the ordinary share, and so therefore whatever dividend will be declared, he is entitled to 75% of it. He is having 40% of the preference share, so whatever preference share dividend will be declared, he is having 40% of it. So the 4,000 on the balance sheet, you strike 75% on it, you get 3,000. So out of the ordinary share dividend that has been proposed, each proportion is how much? 3,000. Now, from the preference share, he is having 40%. So 40% of the 300 is 120. So at the end of the day, the total proposed dividend that H is yet to include in his books is 3,100 and what? And 20. And anytime you see a statement like this, we have learned about errors in level 100. And this type of error, when they said the thing has not yet been included in the book, this type of error, what type of error is that? Who can tell me for a handsome reward of 10 CDs credits? Who can tell me? Raise up your hand and I'll call you. What type of error is this? No entries have been made in the books of H Limited in respect of yes, Mercy.
Error of omission.
Error of omission. Let me hear another person too. Fred Williams who has raised their hand.
Same.
Fred Williams. What type of error is that?
It's an error of total omission.
Error of total omission. I'm sure somebody will also say error of complete omission. Yes, who will raise up their hand?
Yes.
Who else? Who else? Who else? Fred has added total.
Omission.
Yes, who has an idea?
Omission. There's no total omission.
Don't confuse me. Who has an idea? What type of error is that? Sadiq.
Sir,
Yes.
I think it's error of omission.
You think it's error of omission. So me too, I think it's not error of omission. Who is this? Yes, raise up the hand. Who is this? For me, is it anointed, whatever? Please use names I can call you with. Not names I can't call you with. Who is that?
In cancer?
Is it a cancer? A cancer. Talk to me. What error?
Yes. In cancer.
An error of omission.
Error of omission.
Error of omission, yeah.
Okay, who else? Who else have a divergent view? Or because 3 people have said error of omission, you all follow? You. So such an error is an error of omission. And we learned from level 100 that whenever there is an error of omission, it means that the debit side is completely mistaken, or the debit side has completely been understated. The credit side has completely been what? Understated. So the balance sheet to balance without you knowing that there's a problem. So one funny thing I've been telling the student, that when you go to the examination hall and a particular note or a particular footnote is worrying you, don't worry, skip it and continue your work. Because when you don't even see the footnotes, the balance sheet to balance as if nothing has happened. But there is an error. Are you getting it? There is an error. So once the debit side and the credit side has been omitted, you must restate the error or you must correct the error. And once you correct the error, this transaction is a transaction between the group. So you must eliminate it. So take note. whenever they said he is here to include dividend in the books, they know that there are two treatments to the dividend. So this 3,120, we are going to add it to our books, and then we'll go and take it again from our books on the principle of intragroup balances. So if I have received dividend, dividend is an income. Then if I have recorded that income, it would have affected my profits. I get any, and we record dividend in our other comprehensive incomes. So therefore, because we did not record that dividend, our income surplus that we have in the books, that is each income surplus in the books of 90,000, has been understated by 3,120. I get any, has been understated. So I come here, then I say surplus. Each surplus of 90,000, I will now add this 3,120 to it to give me the true reflection of what should have been each income surplus. So now I'll add the 3,120 to each income surplus, which will give me 93,120 as the actual income each should have reported in his balance sheet. So now I've succeeded in correcting the credit side of the account. Let's go and correct the debit side of the account. Now, until 31st December 2012, S Limited is owing H the dividend to pay. The dividend has not come. So if you are correcting the credit side, then the debit side should be well, because the money we have not received it yet. We are yet to receive it. So it means that your debtors must be adjusted. So you come here, your debtors account over here to the debtors of H is how much? 45,000. So the 45,000 debtors of H, you also add the 3,120 to it. So at the end of the day, this 3,120 that we have here, in an attempt to correct the error, you add it to the income surplus, and then you also add it to your debtors account to correct the error. Any question? Any question? So these are all the workings that you need for this particular illustration. So I'll give you the next 1 minute or 2 minutes to copy the workings. So these are all the workings. Let me minimize it so that you can have access to them. So these are all the workings that you'll be doing for this particular illustration. The next thing to do is to do the solving of the question. So I'll give you the next 2 minutes. We'll come back again. Then we'll look at the preparation of the balance sheet.